Yeah, of course. Look, product managers is hard, right? Being very honest with everybody, listen, right? Because you have to deal with macro challenges or challenges outside your control, like the landscape, right? Technology changes, economic factors, regulations, right? Customer behaviors. And at the same time, you have your own internal challenges as well.
Hello, we're Global App Testing, and this is Building Globally, Lessons in Enterprise Product Growth. This is the fastest growing, most exciting podcast in product, and we will be looking at every single angle on how you can grow your enterprise product by talking to professionals in some extremely exciting businesses. On with the show. Hello and welcome to Building Globally, the podcast all about how to build global software products and which just occasionally asks how testing can help. Today, we have Diego dos Santos on the pod. Diego is a director of product management at Mastercard, where he leads Pay by Bank. We're going to be talking to Diego today about network effects and how they can be used to deliver all important user and revenue growth. Hello, Diego. How are you doing?
Hello, I'm doing well. Thanks, Adam. Good to be back.
Fantastic. Can we start just a little bit with a bit of context for yourself then? So just explain to us your role at Mastercard. What problem do you solve for the business? Where do you fit in the Mastercard machine?
Sure, with pleasure. So for context, Mastercard is a payment tech company focused on we call business to consumer. Our value proposition is give customers choice to pay and get paid. Card is very famous, but it's just one of them of what we offer. As a director of product management, my role is primarily lead a group of high performance talent product managers we have. And they are responsible for growing the account to account payments in UK e-commerce market. That is our main function.
Can you give me an example of that? Is that merchants? Is that banks? Who are making these payments?
Sure, exactly. So imagine that you're a consumer, you want to go to pay your utility bills, right? So you can go to your console and there's going to be an option that cards, Mastercard, and then might be an option that I want to pay with my bank account. And then you click on the button and then automatically you can choose which bank you have. For example, let's say Barclays, could be HSBC, could be NatWest. And then once you choose one of those banks, you could potentially see your mobile banking app. If you're doing the transaction, use your mobile banking app. The mobile banking app would be initiated, and then you'll be able to choose your bank account within the bank you chose in order to complete the transaction. So it's basically consumer merchant facing type of payment.
Fantastic. And in terms of the way, the kind of the key targets for the business, I would imagine that you're focusing on like transaction volume through the payment methods that you're responsible in target areas. Is that right?
Yeah, that's correct. We look for particular use cases. We've been very successful within gaming, wallet top-ups, utility bills, and as the technology evolves and also consumers and merchants becomes aware of this technology, we might be moving into more and more into what we call fast retails, the classic e-commerce shops that we have out there, like Tesco's, Argos, and so on.
Fantastic. So we're here to talk about growth, user growth, revenue growth, and I wanted to just take a moment to address that head on. Obviously, there's going to be lots of different kinds of product manager listening to this. I wonder if you could start by identifying a couple of off-the-shelf product growth strategies that a product director should consider when they start their job. Obviously, that's very broad. And just give us a sense of which are some of the ones you've deployed successfully at Mastercard.
First things first, no matter if you are a product manager or a product manager lead, the play is the same. What you change is primarily the role you play. If you're a PM, you might be more hands-on. If you're a PM lead, you have to ensure that your team, has what is needed to drive these strategies. Okay. With that in mind, for existing products, I always start, and Adam knows about this, checking if the product has achieved market fit, meaning Does the product satisfy a market demand, an existing market demand? If we switch off the product today, would customers complain, right? Getting the product market fit right is important, because otherwise your product growth strategy may not be successful if implemented. It's like avoiding an uphill battle, Adam, to make sure that the product has achieved market fit state first. Okay.
And if somebody was coming into a fresh product director role and they had a portfolio of different products and they wanted to identify, I guess, whether a product had fit market fit, how would they go about doing that?
Fab. Yeah. They would check first, like, do we have any transactions? Do you have any users? Right? Is this actually, has this been growing so far? Is it steady? What is the level of retention that I have? Are the users dropping out? So those were the initial, ways that you can understand if the product is market fit or not. So basically, I think the best way to illustrate this is that if you decide to make a strategic or executive decision of, okay, I'm going to remove this product to the market, going to switch this off, would customers complain? Meaning that if they do, meaning that people are using it. If they're using it, you have hit a product market fit.
Double checking product market fit. Strategy number one, top of the list of priorities for you as a new product director. What else is there?
For user growth in particular, I would consider what we call the market penetration, because it's a low risk, right? So you're going to be focused on increasing the user base by driving initiatives that would help you to drive the product usage, right? So optimize the retention, trying to win users back, look into the conversion and acquisition. A good example, what I just said, of a good market easy penetration strategy is enhancing your onboarding experience, using referrals. Those are the classic first ones, low risk, that you could apply and help you to drive more uptake on your product, and a simple market penetration strategy.
Can you give examples of how you've done that at Mastercard?
Well, we done this at Mastercard. We recently tried to do the uptake of the product that I currently responsible for, Pay by Bank. So what we did is that we identified there's too many steps in the process to onboard we call participants. Participants, it could be a bank, or it could be what we call an acquire, which is a merchant's bank, to put it in a simple way, right? We identified that if we could reduce the number of steps to onboard a acquire or a bank, we would substantially increase the uptake of the product, because we would reduce the lead time. Consequently, you would have more users, consumers and merchants into our network. They will be able to transact and it would drive the revenue. With that in mind, we have a substantial growth in the past year in terms of transactions and ecosystem, because we brought more participants in by reducing the friction that we had in the onboarding.
And these things, I mean, finding product market fit and reducing friction in signups, they're the kinds of things that sound really straightforward, and there will be ideas that many of the listeners will have already thought of, but actually in practice are very difficult operationally to pull off and to do, because you say, well, we need to reduce friction, and then I would imagine you then have to have an extremely long and complicated conversation with a compliance specialist, for example. So I wonder if you could talk a little bit about some of the challenges with prosecuting those outcomes that you've experienced, or that you would expect somebody to experience.
Product managers is hard, right? Being very honest with everybody, listen, right? Because you have to deal with macro challenges or challenges outside, your control, like the landscape, right? Technology changes, economic factors, regulations, right? Customer behaviors. And at the same time as well, you have your own internal challenges as well, which is going through the internal processes and buying in from key stakeholders for you to execute those strategies and drive the value that you're seeking to. The main thing is, as a product manager, starting or not, is to truly spend some time to understand what are the key things that is blocking your product to progress, right? So once you have to understand that, you make a short list. Then you have to prioritize which ones that you think you can tackle in a short period of time with least effort and could drive more value to your situation, right? Um, in my case, in my particular case, was clearly the onboarding process, because if I could reduce that, I would be able to bring more participants in, and bring more participants in, meaning more users, and more users, they'll be able to transact, right? However, once you go through the thinking, the discussion is about implementing it. Sometimes you're going to need resources that you don't have. Therefore, you need to identify what are the key stakeholders would allow you or would help you to get the resources that you need. Sometimes you need to go through all the checks, which Adam said, especially when you work in industry, which is, the regulation is quite heavy in comparison to other industries as well, to make sure that whatever you're trying to do in terms of changes meet the compliance requirements that you have within the company, within the customers or the participants you have in the ecosystem, and also the market as well that you're operating. The UK has a market, has a set of regulation, but other markets you operate may have a different set of regulations as well.
Yeah, it's one of the, I guess, challenges with product management in general, is that it is not just knowing what to do, but also to encourage, the whole organization to get on the same page about what to do, and then line up all of the different people who are involved in the decision and guide them towards the right one.
Things that I notice also really helps is have numbers and facts to back you up your pitch, especially with senior leaders. So make sure you've done your homework in terms of have some sort of analysis to prove how much this potentially could increase. If you'd be able to do some testing with data before in a small scale to prove a concept even better, and find allies. Right? I'm sure there's, for example, we're talking about onboarding. I can guarantee to you, if you have a team responsible for onboarding, and there's a senior leader there and you tell him that you has a product, you seek to improve that, there's not only benefit for the product, but it's also benefit for that team leader as well. And he will definitely be a strong ally to help you make a stronger case with senior leaders to back you up, driving this priority.
Once upon a time, I used to work in payments in a business not so different from Zonal, which I know is one of your previous employers. And I have this idea that the thing about payments is that they're a commodity, and that they are therefore, in a high information environment, payments are all about rates and who is offering the cheapest payment, and that consideration comes into effect, and it is more important than any other consideration. So I've got two questions with that said. One, do you think that's true? And then two, how does the significance of price impact your work at Mastercard in terms of how you build and deliver products in the payment space?
Good questions. I think it really depends, because you look at, if you're talking about my experience at, for example, like Zono, which provides software to merchants, right, is one side of the ecosystem, and then you have the other side of the ecosystem, which are the banks, right? And then for merchants, of course, what is very important for them is low processing costs, right? Reach in terms of I want a payment method that has as many consumers as possible, right? Because then, more likely that someone, would be able to pay with this payment method and will be able to accept it. I want something that's safe, right? Which is very important as well, because I don't want to have problems, losing money with losses, etc. And want something that is fast, right? Which is very important for the merchant, because, the moment that the whole dream, which is, you walk in the store, you select the product, you're coming out, or you go to the e-commerce, you go through the whole steps, right? And you want to click the button pay, you want this to go as quick, as efficient as possible. Where on the other side, we have the bank side, which sits with the responsibility to authorize that payment. The bank is not present. The bank doesn't know for sure that the consumer is the consumer is telling it. The merchant is telling that the bank it is, right? So there's lots of risks that the bank has, and to mitigate those risks, there are lots of mitigation systems put in place. So you cannot have two opposite sides in terms of one side, friction could be seen as a benefit. The other side, once as little friction as possible, right? So it's a very interesting dynamics you have in this kind of a payment ecosystem. So whatever you do, right, you need to have that into account.
In terms of like developing market share and what's important there, so because that's very interesting. So would it be fair to say that in order to develop more market share, it's not about basically identify which of the two kind of sides of the market you want to kind of capitalize on and focus your product efforts to grow that size? Would that be a fair conclusion? Sorry, I'm thinking aloud here, but I'm just kind of curious to get you to expand on what you said.
No, that's great. So it really depends who you're talking to. Like if you're talking about from a payment network perspective, right? So you have to have two sides. You have to have the consumers, you have to have the merchants. But to bring those guys in, you have to have the banks and you have to have the acquirers, right? Because basically they are an aggregator of consumers and merchants, and they have different needs, sometimes even conflicting needs, right? Because one sees the benefit of having more friction, the other sees the benefit of not having as much friction. As a payment network provider, you sit in the middle, trying to find a balance, right? Where you can actually have sufficient friction that will address the needs of one side, and on the other side as well, you have a friction that is not going to make very unuser friendly, right, for a consumer to pay with that, and consequently giving losses to the merchant in terms of cart abandonments or people are not using this payment method because it's too much complexity around it, right? People also want to, especially because of the digital wallets and contactless, we are used to pay and go, right? Tap and go. So we have that sense of, but at the same time as well, we need to add some sort of a friction to make sure that ad is added when ad is trying to make a payment, right? Because otherwise, we could be authorizing a payment method that shouldn't be authorized in the first place. So it's understanding the needs of each player, right? And then if you want to grow this network, right, you need thinking about the sequencing of who you should be bringing first, right? It really depends on the markets. Is a new network, is an existing network or not? What kind of a use cases were you thinking about, right? But my experience, I would normally tend to bring a certain level of banks first, which because being the consumers, right? And then bring the merchants because it's much easier. I'll say it's easier, right? For you to go to a merchant and say, hey, I have this payment method here that covers X amount of market share in terms of consumer accounts in UK, than telling a merchant, say, hey, I have this amazing new product method, but I have no consumers whatsoever. Can you add the button to your checkout? The merchant probably going to say, no way.
It's obviously the area of payments within Mastercard that I'm most familiar with. The moat of card payments, the competitive moat that kind of keeps everything in place. Is there one of the things that I think is kind of interesting about them? Like Mastercard's not a bank, or it might have a banking license, but it's not a bank in the way that Lloyd's is a bank. Do you see any risk in terms of disintermediation that there could be competitors to Mastercard that would kind of take Mastercard or card networks in general out the loop?
Let me start with the motor first, right? I would say that whatever we do, it's to leverage network effect, right? Mastercard or any other competitor that we might have in this space, right? Because if you see, card networks as a whole, right? The overall idea, the major card networks, is to expand the footprint with existing solutions, right? Cards is something that we've been talking about, right? Because this is a well-known payment method, is a mature product, but also leveraging the existing network to introduce new value-added services, right? Or even new payment networks to this network. Take Mastercard, for example. If you go into the overall Mastercard strategy, you see the term multi-rail being mentioned several times. Multi-rail translates into embracing other payment rails or other payment networks, such as account-to-account, open banking, or even local payment methods, right? And in an interesting way, our main competitors has in a similar fashion, has a slogan of the network of the networks, right? So that, I think, gives enough evidence for us to say that, hey, card networks, they want to leverage the network effect as much as possible, right? It's been built in 50 years. It's global reach. You have, millions of merchants, millions of account holders. So it's huge, right? So it's well-established network. What also you've seen in the past few years, in terms of competition, answer your question about the competition, you've seen that there are new networks on the rise, driven primarily by national interest, since governments understood how important is the payment infrastructure to a country economy becoming digital more and more every day. Examples that we have is in Brazil, where I came from, there's a new network or payment called Pix. In India, we have something called UPI or RuPay. And even here in UK, in Scotland, we have this Scot Payment Initiative. What those networks or new payment methods they have in common is that they are leveraging the network effect, like Mastercard and others did, but they are, because they are in the beginning of the product lifecycle, they are leveraging or prioritizing initiatives that secure inclusion or adding new users to the network. So then more users you have in the network, more overall value you add to the network. So example, you see that civil servants being paid via UPI payment methods or PIX, right? So that is it because it's a government-led initiative. So I have civil servants, in my payroll. So we're going to push the payments through that. And that's how you start, getting users to use. And then this is moved from, government to people, and then could be moving to people or people to merchant and so on. Just to close, the challenge these networks have is that they are local and normally they are built with local standards, making very difficult for them to interface with other networks from different economic blocks. Where e-commerce is global, people travel, right? And a global network like Mastercard, it has global reach, right? And is a strategic position in a way that can continue to address this need, but also at the same time can help or work with those local networks to help them to reach where they can. And this is the overall idea of the multi-rail.
Hi there, Adam here. Thanks so much for listening. As you may have realized, we're using this podcast to support our marketing efforts. But if you know much about marketing, you'll know that our big challenge is that we don't know who you are. So if you're enjoying this podcast and you want to support it, one way you can do so is to head to globalapptesting.com/podcast. The link should be in the description of this episode, and sign up to receive episodes to your email. As a thank you, in addition to the episodes you are subscribed to normally, you'll receive a tiny extra bit of podcast where we ask our guests a couple of career-related questions, and we ask them what they would have covered in the podcast if we'd had more time. Thanks very much. Is it your general sense that payments is becoming more competitive as a space? What's driving that?
Primarily what I told you in terms of the government really understood that the economy is becoming digital, right? So it's less analog, it's less about money and exchanging money in terms of paper. Right? It's more about the digital economy, the mobile, the laptops and the internet help with that. And with that in mind, you have a much bigger opportunities to transact, not only physically one-to-one, but globally, right? If you think basically in analog type of paper, you're limited to where you are physically. Where you are in a digital space, you can transact with thousands of merchants, for example, online, or send money to thousands of people, where you are. You don't need to be there, right? And has a consequence as well. So you have more transactions. Let's say the pie is growing, but at the same time as well, you have government and other businesses as well understanding that there is a role they can play and they should be playing in this space to secure that their space in this pie or their piece in the pie.
To secure, because they sort of think, well, this is a market that is appropriate for a government to kind of put a stake into because it's a commodity market that we could just we don't have to actually innovate lots of different things or build a really complicated thing. They just need to kind of grab market share. Do you think that is that how they see it?
How to see as well, but also, I mean, taking the government perspective as well, right? So if you think about, the whole economy is moving from, cash and checks, right, to digital transactions, right? And then as a way to be present, as a way to understand this better, as a way to support this better, it makes sense for governments, to drive, initiatives where they are funding or where they are regulating or they are even, driving the technology of a local, national infrastructure in this space. Because primarily government makes money, at least on the Western world, on taxes, right? On top of, financial transactions. Hence, it also helps them digitally, have a better view and have a better data to be able to make sure that the appropriate tax system is being implemented accordingly as well.
So I just want to ask a couple of questions now about network effects. I mean, we've talked a little bit about network effects as important to Mastercard's strategy. If you're a product manager and you have a product that has some kind of network effect that's reliant on it, how do you see the risks? How do you ensure that the network is healthy, that we're growing the network? What are the kind of things that, as a steward of a network, that you would be concerned about?
We're talking about a lot of the benefits of network, etc. But I think one of the key challenges of the network effect has its benefits in terms of growth, in terms of making you protect you against your competitors. Right? It's a clear example of like a Mastercard and other card networks. They use this. And they have this solid position in the market for many years. But nurturing this network is a big challenge, and it is a constant effort. Right? Because if one side of the network no longer sees value and they leave, the whole network will collapse. Right? That is one issue. And one way to address this is making sure that you have rules in place, have a governance in place. You always keep looking for new services or new product opportunities or pain points that haven't been addressed that could be addressed by new product features or propositions, right? To make sure that you have all the participants in the network engaged and satisfied to continue within the network. The other issue as well, this is more when you're starting a new network, right? That I see when you grow too fast, it can happen. And then you have the situation that you could be in a catastrophic position of you're growing too fast. There's too many users coming, but you didn't put the right structure in place. So you don't have the right people or enough people or the systems in place or process at hand. And then you get inundated, right, with problems. And that is a problem because you're going to let customers now, and then you're going to see an increase of churn. And then win back those customers might become a challenge because the trust is broken. And then you might not have enough time as well to put all the systems in place, process and people in place to have the muscles that you need to deal with this exponential growth.
How do you think about success in a network effect strategy? How do you target? How do you kind of plan for it?
Several things, right? I know I'm giving kind of an economist answer. It depends where you are in terms of the life cycle. If you're early stages of the network, if you're building a network from scratch, if you're is an existing product. But if you look at they're always going to work for you. Retention. I keep repeating this because retention for me is very important, and I think it fits the overall idea of the network concept. Conversion, especially from a merchant perspective, is very important how you convert customers into the network, right? Activating new customers, acquiring new customers or users, right? The churning, how is the churning? Your market share, number of users, right? And if you look into the revenue side of things, profitability, average revenue per user, customer acquisitions, right? You cannot get wrong with those metrics. But again, it really depends what kind of the product, what kind of a strategy you have, where you are in the journey. Some of them might be more important now, some of them might be more important later.
If you were starting a network, I mean, I guess I would imagine that the fastest way to do it would be via strategic partnerships. That would be the best way to solve a cold start problem, that sort of thing. Is that your take or something else?
It could be. It could be with partnerships, right? So if you see, I think Airbnb was a good example that they leverage Craigslist network in order to get as many users as possible to jumpstart their own network. So that is one use case. There's also use cases as well of getting the right sequence of users as well. This is normally my go-to option, right? So getting the first things right. You touched the basis early in the conversation that we had about, who should we bring first, banks or merchants, or banks, right? And I gave you my experience that I being more successful, focus on bringing more banks and then bring more merchants. Another good example that I like to share is about the credit card, right? And how the credit card in the 50s, they managed to solve this chicken and egg situation as well. There is this bank in a small town in California where they have a substantial amount of account holders. And what they did, they want to create this idea of the credit card, right? When you you give the account holder a card with an X amount of money that they can actually go use in a shop. So what they did first was they noticed okay, how many users we already have. So we have more than, let's say, for example, I don't know exactly the number, but let's say that we have around 50% of all the account holders available in this small town, right? That should be enough. And then they went to talk with the merchants in the town. They said, okay, let's get a few hundreds of merchants here, right? Let's pitch our proposition. Because they have a good substantial amount of users already, they said to the merchants, we have this idea here. Would you be inclined to accept it? And they managed to sign up hundreds of merchants with the idea. What they did next was they mailed the card, classic, with instant credit ready to go, with a list of merchants, right, that they could spend on. And then the rest is history, right? But I think what I want to illustrate with this approach is that to solve for the cold start problem or the chicken and egg problem, they use the sequencing, right? But also, has the network has two sides, right? Merchants and banks, or merchants and consumers, right? They also managed to leverage a product feature, right? Which is, I'm going to give you, a card, consumer, for you to use it, and also a financial reward, right? Which is, I'm going to give you instant credit. You have to pay me back, but I'm going to give you instant credit, right, of X for you to go, and use it and see how it goes, right? And then I have a substantial amount of merchants that would jumpstart the network. And then from that, they would be able to grow. So I also like this story as well, because as a product, we always had this fantasy of, I'm going to launch a product and it's going to be global, right? From day one. But it takes lots of time and effort. And start small, test it, learn it. You might have to pivot, but start small, see how it goes. And then you gradually keep growing, because as we made the joke earlier, it might end up that you grow too fast, and then you're going to have a different type of problem, a different type of headache, right? Which is not lacking users, but too many users, too much demand, and then you don't have enough structure in place to handle that, and it could let you to fail.
You are now you're a product director at Mastercard. How did you end up where you are? Why payments? But why become a product director at Mastercard?
Let me tell you, I did not plan to become one, right? Life is a journey, and I embrace that. I spent most of my career working in roles that would lead me to become a product person. So technical BA, I even did sales roles as well for some time. But I never thought okay, I woke up on this, I want to be a product person. So it was a path. And then somehow I got that. But I do remember that I was working for this tech company, and I spent most of my career in merchant acceptance, as we say, at Mastercard, or working with merchants. And I never had an experience to work with banks. And I was always intrigued about working with banks, how that would look like. And I saw an opportunity to work for Mastercard at the time as a product manager. I remember I read the job spec, and I said, hey, I can do this job, and apply for it. Went through the whole process, and then I was lucky enough to get an offer and accepted. And it was a huge learning curve. But I do remember one thing when I started with the team I started, is that I think I was a bit insecure with myself, because I never worked for a bank, or I never worked with payments before joining Mastercard. You always think that, oh my God, what I'm doing here, right? But at the same time, the team and the product I was working for, they had very little or limited experience or exposure to merchants and merchant acceptance, which I had plenty of. And that was a huge exchange. And that actually has helped me massively within my career at Mastercard, because I always bring this merchant and consumer point of view to every conversation that we have, and also taking risks. software risks, right? Sometimes you have to go for projects that they have an element of risk because it may pay out.
Most of the people listening to this will be they'll be product managers, and I would imagine that for most of those people that probably means B2B software as a service, just because I think I'm right in saying that's the kind of biggest category of product managers. From the perspective of that person and who has not worked in payments, can you tell us a little bit about payments? Do you feel as though the culture is different? Do you feel as though the job is very different from working in a sort of more kind of B2B SaaS role? What are the differences that somebody should expect if they're considering payments?
I mean, I won't be able to give a general view to every single industry out there, but I'll give you let's say, the cultural shock for coming from a merchant acceptance industry to a payment industry. The first thing I notice is the speed is different. You can be really fast on how you build things, but for you to push things through into production, etc., is not as fast and dynamic as you would be in a merchant side of things. I think the primarily reason is that there is more risks and there is more regulation. So you have to be very committed and very thoughtful about making sure that you have a product that meets and is 100% compliant with every single requirement that has to be compliant, right? That is one element. There's the element as well, which is working for a company the size of Mastercard, a global company, which has such a strong brand. One of the key assets of Mastercard is the brand. So you have to make sure you get things right because it could impact the perception of value of the brand. Therefore, the level of scrutiny is higher, hence that we really carefully think through before we push things out.
And is there any advice about growing software products that we've not covered in the main podcast that you think would be a good thing to share for that kind of listener?
What I've noticed in the past few years, and also was lucky enough to have exposure to this as well, we have more and more product-led versus sales-led products going to the market. And I think it's great, especially on the B2B space. Right? Initially, we always seem to think of product-led in the B2C space, but especially on the B2B space. And I think this is great, right? Because it changes how we normally think. The sales cycles is shorter. You have more exposure to direct feedback from customers as well. And you can get into economic scales faster as well. So that's something that we haven't covered, but I think that is something that I have been having more and more exposure about this, especially in the B2B space, and I think it's great.
Fantastic. Diego, thank you very much.
Building Globally was brought to you by Global App Testing. To find out more about how best-in-class functional and UX testing can help your product grow, head to globalapptesting.com. If you enjoyed what you just heard, click follow on the platform you're using right now. Building Globally is available anywhere you get your podcasts.